Cisco beat, raised guidance, and fell 8%. Same week, SanDisk rose 35, and Micron 10. The index barely moved. The S&P added 1/3%, and everything interesting happened underneath it. Producer prices are running at 4.7% a year while consumer prices are running at 3.4%. That gap has to sit in somebody's margin, and this week the market went looking for whose. 3 calls, 3 hits, and 1 I left on the table. Core CPI printed 0.2, where I said it would, against a street at 0.3. The S&P never closed below 7,600, its worst close was 7,728. And I gave 65% odds that some company would beat, raise, and close lower anyway. Cisco did all 3, down 8.4. Now the miss. Last week I flagged that the optical names were being priced before anyone had seen their quarters, and I stopped at the observation. Coherent then fell 14% on Monday with no news at all, reported a genuinely strong quarter on Wednesday, and sold off again. I had the mechanism and never put a number on it. One housekeeping note. My semis level was the SOX index, and I couldn't get 2 sources to agree on where it closed, so I'm grading it on the SOXX fund instead, up 1.3. When I can't verify a number, you'll hear me say so. The Dow actually fell on the week, which tells you the leadership was nowhere near the megacaps. Energy rose 7.7% and the second best sector managed 1.6. A 6-point gap between first and second place isn't a rotation, it's a single event, and I'll come back to it. At the other end, consumer discretionary was the only sector down more than 1%. Volatility sat near 14 and the 10-year finished at 4.69. Neither the bond market nor the options market thought anything was wrong, while underneath them the dispersion was the widest in months. This is where the week quietly improved, and almost nobody said so. The median S&P company gained 0.64% while the index gained 0.36. The typical stock beat the index. Last week ran the other way, median up 2% against an index up 3.5%. In 7 days this market went from being carried by a handful of names to being carried by the middle of the list. 292 names rose against 209 that fell, and the share of the index above its 50-day average improved from 65% to 69%. Broad, but mild, and still the healthier version of a flat week. Sort the week by who sells memory and who buys it, and the whole thing falls into order. Selling it, SanDisk up 35, Super Micro 28, Seagate 20, Western Digital 17, Micron 11, Teradyne 10. Buying it, Cisco down 8, Broadcom down 8, Applied Materials down 6. Cisco is the cleanest example this year of a good quarter that didn't matter. Revenue up 18%, an earnings beat, guidance above consensus, and gross margin down from 68.4 to 66.3, which the company attributed partly to the cost of components used in AI hardware. Memory, in other words. Super Micro is that same trade from the other end, guiding next year's revenue 30% above the street with gross margin at 17.5% against 9.5% a year ago. Somebody is capturing this cycle, and it isn't the people assembling the boxes. The frame for this week is pass-through, and specifically who fails at it. KeyBank expects DRAM contract prices to rise 15 to 20% this quarter and NAND 30 to 40%. That cost lands on everyone who builds hardware, and the only question is whether they can hand it on. Cisco couldn't, and its multiple paid for it in one session. Which is why I'm watching retail next week instead of tech. If the memory bill is already visible in networking gross margins, the question worth asking is which industry admits next that it can't pass a cost along. If you want the supply chain underneath these moves, subscribe. Same depth, every Saturday. Energy didn't rally on oil this week. It rallied on the refiners. Marathon Petroleum rose 19%, Phillips 66 and Valero about 15 each, while Exxon rose under 5. When refiners double the majors, the market isn't pricing a higher oil price. It's pricing physical barrels that can't reach where they're needed. The cause isn't a headline, it's a count. The Strait of Hormuz has been shut to commercial traffic since March, and on August 9 the IMF's PortWatch logged exactly 1 transit through it, against a pre-crisis baseline of 73 a day. That's a waterway carrying roughly 1/5 of the oil the world consumes, running at 1 ship. Tidewater rose 14, Transocean 9.5, Oceaneering nearly 9. The recaps got the follow-on backwards. The Russell 2000 set 3 record highs while the Dow fell, written up as small caps leading a risk-on tape. That index is stuffed with refiners, oil services and domestic industrials, which is exactly what a closed strait just repriced. The record is an energy print wearing a small cap costume. On Friday, AMD rose 6.5% and Broadcom fell 6%. Both moves were about debt. AMD closed the largest investment-grade bond sale in its history, $4.75 billion across 4 tranches, with demand strong enough to price the long end below where it started. That borrowing got read as capacity to build. The same afternoon, a Bank of America note asked what Broadcom's chip financing vehicle could carry at scale and landed near $370 billion of senior debt by 2029. That borrowing got read as risk. Broadcom also had a live VMware vulnerability that day, so it isn't a clean experiment, but the direction is unmistakable. The market has started pricing AI balance sheets separately from AI revenue. That's new, and if it sticks, it decides who finishes the data centers. 3 prints, and in order they tell one story. Wednesday, core CPI came in at 0.2 against 0.3 expected, with headline inflation at 3.4. Cool. Thursday, producer prices were flat on the month and the annual rate fell to 4.7 from 5.5. Also cool, and still more than a point above consumer inflation. Friday did the damage. July retail sales fell 0.6%, and August consumer sentiment dropped to 51 from 55.2. Costs at the factory gate are rising faster than prices at the till, and the reason companies can't close that gap is sitting in the retail sales line. The consumer stopped absorbing. It's why discretionary was the worst sector this week, and why next week matters more than this one did. The best close of the week was Thursday, not Friday. The S&P finished 0.8 of a point worse on Friday than Thursday, the Nasdaq more than a full point worse, and Friday's tape closed with 250 advancers against 245 decliners. The median stock moved exactly 0. 2 things accelerated into the bell: energy and small caps. Everything cap-weighted decelerated. The software names are the tell. Cloudflare, MongoDB, Atlassian, Zscaler, and Palantir each gave back 6 to 11 points of momentum between Thursday and Friday with no news attached to any of them. That's positioning coming off ahead of a weekend. Same green week as last time, and a very different Monday. Nothing is scheduled, and this weekend that's the risk rather than the reassurance. No OPEC Plus meeting, which was the first weekend of August. No Berkshire print, no sovereign rating reviews, no Saturday corporate news. But on Tuesday, Qatar's foreign ministry said the Oman and Iran talks on reopening Hormuz are at an advanced stage, while Iran keeps insisting on sanctions relief first and the US says its naval blockade can run indefinitely. That's an unscheduled headline sitting on top of the best-performing sector of the week. Energy put in 7.7%, most of it on Monday's open before anyone could react, and it can leave the same way. This weekend's gap risk has no time stamp on it, which makes it worse rather than better. Next week the consumer answers for Friday's data. Home Depot reports Tuesday before the open with the street at $4.71, Lowe's and Target land Wednesday, and Walmart is Thursday, where consensus wants 74 cents on $186.7 billion. FOMC minutes are Wednesday, housing starts Tuesday, and both Nvidia and Jackson Hole are the week after. So, the call. Base case, about 60-40, at least 2 of those 4 retailers close lower on the day they report. Their guidance was set before a -0.6 retail sales month and a 51 sentiment reading, and this market has spent 2 straight weeks selling companies that beat but couldn't promise more. Separately, about 55-45 that Walmart clears its revenue number and still doesn't close green. 4 levels. 7,799 is Thursday's close, and taking it back means Friday was a one-day reaction to one data point. 7,728 is Tuesday's low close, and 2 closes under it mean the consumer story is pressuring the whole index rather than one sector. Energy's fund at 6191 is the Hormuz trade in a single number, and it breaks first if those talks move. The Russell at 3068 is where either small caps hand back the record or the large caps come to them. What would prove me wrong? 3 or 4 of those retailers beat and close higher. Then July's retail sales print was a noise month, the consumer is fine, and this week was a story about memory prices and nothing else. I'll grade every one of those here next Saturday, starting with whatever I got wrong. I'm Big Z, follow me, see you in the next deep dive.